I bet you haven't heard anywhere else that it has been over 20 years since mortgage interest rates started out the spring buying season at this level. What does this mean for the Southern California housing market? Will spring or not? Hey there, Christian Walsh, real estate agent with Wire Associates. We have been helping buyers and sellers make the best data-driven decisions during these crazy days, and we're not here to clickbait you. We're going to give you actual and factual data so that you can make a decision about the housing market. So if you're ready to dive into mortgage interest rates, mortgage applications, the market action index, inventory, and days on market for Orange County, LA, San Diego, Riverside, San Bernardino, and Ventura counties, hit that like button and let's get started. Let's take a look at mortgage interest rates with the help of Freddie Mac, and we can see that rates have gone up since the first of the year. They were going down, increasing demand, and then they started to go up. And how far do they have to go back to have a similar interest rate at the start of the spring buying season? We have to jump into your time machine and go back 21 years while No Doubt was singing about hey baby, hey baby, hey. You have to go all the way back to March of 2002 in order to see interest rates starting out the spring buying season at this similar rate. That means that this mortgage interest rate is able to order a drink at a bar and take a shot. So what effect does this have on mortgage applications right now and buyer demand? And we all know what happened last year as interest rates went up. We saw demand drop. The interesting thing at the same time, and you've seen it in our reports, is inventory went down. So prices have dropped slightly year over year. As we showed you in the first part of this video series, we showed you that year over year there is a slight drop in Southern California counties, 5 of the 6. But what can we expect in the weeks and months ahead based on what's happening to interest rates, seeing them go up? Well, according to mortgage applications, they're increasing as well. So we did see the year started off with a big surge in mortgage applications. Then rates started to go up and we saw a drop as that happened. But most recently, buyers have decided they're going to jump in. Even as rates are getting close to 7 again, which killed the market before when rates hit 7. And we're on our way there yet again. Mortgage applications for the most recent week have gone up. So it looks like there are plenty of buyers out there ready to buy. But how does inventory compare? Switching to our trusty Altos Research Reports, we're going to look at 3 important things. We'll look at California. We'll go through all the Southern California counties so you can see 3 important things. One is the market action index, and you can see that in the middle of the screen. You can see that we're in a strong seller's market for the state of California. The other important thing I want to look at median days on market. And we can see at a statewide level that the median days on market has dropped since the holidays. That's typical. Going back, you see the dots. But for a state at 63 days on market, we're above anywhere we've been in the past, going all the way back to 2018. And now taking a look at inventory at the statewide level, we can see that we are at a level that is lower than 2020 and lower than years past. The other important thing to notice with the dots, these are year over year marks, that the inventory starts to go up at this point in time after all of these dots. But this isn't looking like it's trending the same way. It does look like we're trending down. And I want you to keep an eye on that as we look at the different counties. If you like our data, you're going to love working with us. So if you're thinking of buying or selling, let us know. We are real estate agents based in Southern California, now with an office in Orange County and Los Angeles. Moving into the county level, and it's important to watch all of these to see the regional differences. Orange County, according to the Market Action Index, is a strong seller's market as well. Median days on market, you can see that big drop that we have after the holidays, and it's down to 35. So it's around half of where it is at the state level. Orange County inventory is low, only lower in 2021 and 2022, and quite frankly, not too far off of 2021, and much higher in years before. And again, look at the trend in inventory. It tends to stay flat or start to go up this time of year. And in Orange County, it looks like it's heading down. So we're going to have to continue to track and see what happens to inventory in Orange County. You saw in our last market update when we compared February's numbers, when we compared pending sales to new listings, in Orange County, we had the twist. So we're not getting enough new inventory for all the buyers out there, and it's reflected in the inventory levels here. Los Angeles, another strong seller's market, and another place where we're seeing a drop in median days on market. Now, we still are at a higher level for median days on market than years past. So the market has shifted there slightly for days on market, but it's not a dramatic drop like we saw in Orange County. So things are still taking quite a bit longer to sell than they would normally at this time, but we'll have to see how that continues to trend and if we do get a drop. And inventory remains low in Los Angeles. We can see that same trend here where it's below 2020 levels and approaching 2021 levels for inventory. And a similar trend where we see things level off and then start to tick up for inventory. But this dot looks like it's traveling down. So it doesn't look like there's going to be an increase in inventory. Now, as we've mentioned in our other videos, there should be or could be an increase in inventory as the foreclosure moratorium comes to an end in Los Angeles County, and it also covers LA City. We may start to see inventory tick up as landlords have an easier ability to sell their properties. So keep an eye on inventory levels in Los Angeles. They may tick up faster than other counties because of this change. Riverside County, we can see that we're at a slight seller's advantage right now, and median days on market has taken its typical turn, started to drop. It is at 63 days, so faster than Los Angeles, but not as fast as Orange County. And you can see too that it was lower in years past. You have to go back all the way to 2019 to see a similar level. Inventory is down and continues to look like it's trending down, and doesn't look like there's going to be a reason to see that increase in Riverside. It's lower than 2020 levels and appears to be dropping instead of leveling out and starting to go the other way. San Bernardino, we're seeing a slight seller's advantage there. So far we've seen it become more of a seller's market in every county in Southern California. Median days on market has taken its turn. It's a slower turn than years past, and it's somewhat equivalent to what looks like 2019 levels for days on market, so 77 days. So that is the longest county so far that we've seen. And a similar tale of inventory down, less than 2020 levels, and doesn't appear to be turning and going up the other way, which is definitely a trend that you see in years past where it starts to go up. We're not yet seeing that turn. So if inventory continues to stay tight and we don't get enough of it, and that is possible because of the weather that they've had in San Bernardino and some of the mountain towns, definitely nobody listing, but also nobody buying, so they could offset each other. And Ventura County has tipped the scales into a strong seller's market. We could see that in the market action index. We see a big drop in days on market down to 63 for the median, and this is similar to 2019 levels. Have to go back to there. Inventory is low. It has been low for several years, below 2020 levels like we've seen with the other counties. Now they tend to have a flatter inventory curve in Ventura, just fewer properties in general. So this one does look like it's leveling off slightly at the tail end here, but definitely not enough inventory. In fact, do they have, okay, very close between 2023 and 2021 for the levels. Obviously very different interest rates, but we'll have to keep track on what happens in Ventura. And San Diego continues to marvel. It is a strong seller's market, the strongest seller's market in Southern California right now, and also was one of the strongest before and one of the last to drop and always was the strongest. So all those reports of San Diego's demise are exaggerated. And let's take a look at median days on market. So 42. And that's the big drop. So we can see the ones that are more of a seller's market have had a bigger drop in days on market since the holiday season. It is around 2020 levels for days on market. in San Diego. And inventory is down as well, very similar to 2021 levels, actually below 2021 levels. And it could be leveling off and going the other way, as it should, or it can continue to drop. It's hard to tell what's going to happen and why you need to sign up for these Altos Research Reports. You can search for any city or zip code across the United States, and I can sign you up for the counties that you've seen here, so just let me know. Let us know what you're seeing out there in the market right now. Are you seeing multiple offers and crazy busy open houses like we are? Let us know in the comments below. Make sure you subscribe to those free Altos Research Reports. You're not going to get data like that anywhere else. And as a bonus, you'll be subscribed to our free weekly email newsletter. I am telling you, you're missing out if you're not getting that. And make sure you check out part 1 of this video where we covered the Southern California median home price and a whole lot more. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.